192A, that is premature withdrawal from the employee provident fund. So here TDS will be deducted if the payment is greater than or equal to 50,000 and the employees have served for less than 5 years. So here what happens is whatever amount is there on that 10% of the premature withdrawal, on that 10% will be deducted at the time of payment. So there will not be any TDS applicability if the employees have been in service for a continuous period of 5 years, and if they have served for less than 5 years also, the whatever provident fund balance is there, that has been transferred to the new employee, or whatever termination of the employee has happened due to ill health, or there is discontinuance of the business or cessation of the employment. So in such cases the TDS amount will not be deducted. Next comes 194. So here what happens is dividend, if at all it has been distributed, which includes dividend on preference shares, and 222A as well as 222F, which includes deemed dividend. Both are also deemed dividend. One is the amount in respect of the buyback of shares, which is treated as deemed dividend, and then the proceeds are treated under the head income from other sources. So, and also here what happens is amount or aggregate amount in respect of a particular company. So each company we need to see if it exceeds 10,000 in a financial year. In such cases, whatever amount is there on that, if at all it has been paid in any mode other than cash, then the TDS at the rate of 10% will be deducted. If it is paid in cash, if suppose, then in such cases there is no limit to be seen. Even if 1 rupee is distributed, even then the TDS will be deducted. If it is only in the mode other than cash, only in that cases 10,000 limit needs to be seen. Now the exemption is in respect of the LIC, GSC, if they have issued shares. In such cases there is no TDS need to be deducted. Next we have winning from lotteries, crossword puzzles, or other card games or other game, except the winning from online games. So here what happens is amount in a single transaction, if it exceeds 10,000, then in such cases 30% will be deducted as TDS. So now it will be deducted at the time of payment. If they are paid in kind, then in such cases what happens is the amount, the gift will be released only after the payment of such taxes. So then what we have is whatever winnings is there, if there is any loss, it will not be set off against those loss. For example, if I have earned 1 lakh and there is also loss of 20,000, now TDS will be applied on 1 lakh, that is 1 lakh into 30%, that is 30,000. Next comes 194D, that is insurance commission. If the insurance commission is in excess of 20,000 in a financial year, then in such cases 2% will be deducted in case of non-corporate residents, and 10% will be deducted if the payee is domestic company. So payee might be any person. It might be in respect to the business, like fresh business, whatever is has been started, or in respect of the renewal or continuance of the insurance policies, whatever is there. Here 194 DA. If the sum is in excess of 1 lakh in a financial year, if it is greater than or equal to 1 lakh in a financial year, then in such cases the 2% of the sum will be deducted as TDS, provided it is not exempt under section 1010D. Next comes commission on sale of lottery tickets. So if the commission is in excess of 20,000, then in such cases the 2% of such sum will be deducted as TDS. So here what happens is basically 194 IA deals with the transfer of immovable property and agricultural land. So here what happens is greater than or equal to 50 lakhs consideration for the transfer of the or stamp duty value. So here the transfer is other than those referred under compulsory acquisition, other than the person, that person, whoever is there. Here 1% of the consideration for the transfer or stamp duty value, whichever is higher. Then at the time of credit of such sum to the account of the transfer or at the time of payment, whichever is earlier, it will be deducted. So whatever consideration is there, it includes the consideration which is in respect of incidental to such transfer, and also the consideration is total of all the amount which has been paid to the transferor or transferors. So here what happens is 194 IA. So basically payment if it is made for transfer of any immovable property. So it includes agricultural land. So here what happens is basically if the amount is greater than or equal to 50 lakhs of the consideration, so then in such cases 1% of the consideration for the transfer of stamp duty value or consideration whichever is higher will be deducted. So this is the crux. So then we have income on units other than in the nature of capital gains. So if the amount is exceeding 10,000 in a financial year, then in such cases 10% TDS needs to be deducted. So then what we have is 194 LA. So 194 LA is in respect of the compulsory acquisition of the immovable property. So here any agricultural land, that is urban or rural agricultural land, will be excluded from the scope. So here what happens is amount or the aggregate amount, if it exceeds 5 lakhs in a financial year, then in such cases 10% of the such sum will be deducted as TDS at the time of payment. So now 194P. So 194P is in respect of the senior citizen who is 75 years or more and he is receiving pension income and no other income other than income from other sources. So now what happens is only one bank account he has got, and that only he is getting pension, and in that only he is getting income from other sources. And in such cases what bank will do is bank will furnish the return of income. So here has furnished the declaration to compute the total income for the relevant assessment year of the specified senior citizen who furnishes the declaration specified in prescribed form and deduct tax after giving effect to the deductions under chapter 6A, if any allowable, the basis of the evidence furnished by the senior citizen underpaid allowable. So whatever regime it might be, like old tax regime or new tax old tax regime or default tax regime. So whatever has been told that if he wants to opt, if the senior citizen wants to opt that will be opted. Now, in case of purchase of goods, so buyers, turnover, sales, or gross receipts need to exceed 10 crores immediately preceding the financial year in which purchase of goods has taken place from any resident can purchase. Now, what is the TDS rate? TDS rate is 0.1% of the sum exceeding 50 lakhs. However, this is not applicable if 206C is applicable or any other provisions if the tax is deducted. So then what we have is value or aggregate value of the perquisite if it is provided in cash or if it is provided in kind or if it is partly in cash or partly in kind. If it is exceeding 20,000 in a financial year, in such cases 10% of such amount will be deducted as TDS. However, if that amount is not sufficient to cover the tax liability, then in such cases the perquisite will be given only after the tax has been paid on such perquisites. This is all about section 194R. And here any person if is paying to the resident, that is any person other than individual or HUF whose sales turnover gross receipts exceeds 1 crore in case of business or 50 lakhs in case of profession during the immediately preceding financial year, then in such cases TDS will be deducted. Sellers are required to deduct or collect certain amount as TCS from the buyer in the following cases. That is alcoholic liquor for human consumption, that is 1%, tender leaves 5%, timber other than forest produce not being tender leaves, that is 2%, timber obtained by any other mode other than above is 2%, scrap is 1%, minerals being coal or lignite or iron ore is 1%. So this will be deducted at the time of collected at the time of debiting the amount payable by the buyer to this account or at the time of receipt of such amount from the buyer, whichever is earlier. So whenever a declaration is received from the buyer that this amount is utilized for the purpose of manufacturing, processing or producing of the articles and it is not utilized for the trading purposes, then no tax need to be collected. So next is if the license or lease of the parking lot, toll plaza or mine or quarry is licensed by a lessor to the lessee, then in such cases the TCS need to be collected at the rate of 2%, provided this mining is not about the mining of the mineral oil, that is petroleum and natural gas, then no TCS need to be collected. In other cases, the TCS need to be collected. So now, seller, if he is selling any motor vehicle of a value exceeding 10 lakhs, then in such cases 206(1)(f) requires to collect TCS at the rate of 1% of the sale consideration. And now certain other goods have also been included, that is if we sell each of such goods exceeding 10 lakhs, then TCS need to be collected. That is any wristwatch, any art piece such as antiques, paintings, sculpture, any collectibles such as coin stamp, any yacht, rowing boat, canoe, helicopter, any pair of sunglasses, bags such as handbag, purse, pair of shoes, sportswear and equipment such as golf kit, skywear, any home theater, any horse for horse racing and race clubs, and horse for polo. If you sell any of these, uh, and then there is a consideration in excess of 10 lakhs, then TCS needs to be collected. Next comes 206 C1G, that is remittance under the LRS of RBI through an authorized dealer or purchase of an overseas tour package. So here what happens is, who is authorized dealer? So bank or financial institutions who is permitted by the RBI under the FEMAR. So here what happens is, under the employees remittance scheme, up to USD 250,000 per financial year is allowed for permitted purposes. Or if that person is a seller of an overseas tour package, then in such cases tax has to be collected. So what are the purposes? That is, if you are purchasing any overseas tour program, then in such cases 10%, 10 up to 10 lakhs, it is 5%, and above 10 lakhs it is 20%. So next it is, if the a person is doing any education outside India, so now if that amount is remitted out of the loan taken from a financial institution, then in such cases no TCS is applicable. And for purposes of education or medical treatment, if there is no loan taken, then in such cases 5% of the amount or aggregate amount in excess of the 10 lakhs. If it is for other than education and medical treatment, then 20% of the amount or aggregate amount in excess of 10 lakhs. So now they are asking that 10 lakh, whether it is for each purpose. So if separately, if I transfer 10 lakhs for each purposes, so is it combined I need to take 30 lakhs, or I need to take individually 10 lakhs and TCS is not applicable? No, it is the combined limit of combined limit need to be taken, that is 30 lakhs. So up to 10 lakhs it is exempt, and above 10 lakhs it is the specified rates get applicable. So again there is a note as to whether it is co-remitter or co-authorized dealer. So it is co-remitter, it's not co-authorized dealer. That is, if you have purchased from different authorized dealers,